So where we at? Check, radio check. So I want to welcome everybody. Thank you for taking time out of your busy schedule. So for the month of October, right? So remember, we're in November, and the markets actually had an okay month, right? So or I should say, it started to tail off from September. We've had an okay couple weeks, but as you can see, everything was below the zero line, right? 0%. So it didn't matter which asset class you picked. We had the Dow Jones, we had the S&P, and the Russell 2000. So, as we start to look out into the future, one of the things that I've been cautious about is, hey, is there a recession on the horizon? But I can tell you, I listened to a lot of talking heads. Listened to an economist today that was basically saying she doesn't see it right now. She says things are starting to heal, and that's good news, which is why we've seen an uptick in some of the equity holdings, and that's all good news. But right now, playing Monday day quarterback, it just shows that for the month of October, things weren't tremendous. And then even as a year went on, right, we see that really the bright spot was the small caps. Some of the gains that have been gained earlier this year started to drift off. I think when we look at November, we'll see a little bit of that recovery. But right now, as it stands, we say, there's some turbulence out there, and again, I still am cautious, right? I'm not saying, hey, let's go, everything's fine, don't worry about anything, and just keep doing what you're doing. I still have concerns with some of the things that are happening in the marketplace, but I do think that things have started to slow down a little bit, or that we won't see as much of the volatility, bar some of the incidents that have happened, of late. So as we look at the three indicators, so the top line is your this here is your moving average, which is 3-month and 12-month, and this is, think of this as a trend, right? What is the direction that things tend to move in, right? So right now we're still in this upward trend. You can still see we have a green line. So that's one technical indicator that says, hey, everything is okay. But remember, it's not just one gauge on our dashboard that we're looking at. RSI, relative strength index is, is there anything that's dictating speed? And between the red and the green line there, we see that it's still, it's chugging along. So there's no really anything that's causing us to say, hey, be careful right now. And I know last month I was a little concerned, but right now maybe the MACD, which is really a directional, right? Which one of the signals, which way should we go? Should we, it's a momentum indicator, but are we going in the direction, are we going north? Are we going west? Are we going east? So as I look at these, I say, hey, you know what? Right now, there doesn't seem to be a crossover. I know that at least in order to get a change in color in the line, all three indices have to trip in order for it to say, hey, now we are in a downward trajectory, as you can see at the beginning of 2022. So that's where that red line versus the green line, we still have some wind in our sails. So that's where I say that, you know what, I tend to agree with what I heard today with the economists, that right now, Q4, I think, bar something significant, I think we will continue out the year with some hope, right? Some positive news. And Q1, I don't even think we'll see anything overly dramatic. But as we start to, look into Q2 and it being an election year, I think we will see how much volatility starts to enter back into the equities marketplace. So that's my read on how I'm reading the charts right now. Now, again, as I look at, the income portfolios, everything's down. So everything for the month of October, if you're in any type of holdings, the Fed has paused raising interest rates, but a lot of portfolios you know, they lost some value. So that was, you know, from a valuation standpoint. And then remember, bonds don't like rising interest rates, but the yields, which seem to be like we started hearing, hey, you know, the 30-year treasury, you know, was, you know, mortgage rates are above 8%. Well, they've now fallen back, you know, into the sevens, right? So I'm seeing some relief of pressure there. But if you're on an income portfolio and starting to count on this income, it's not great news for you, because that means that A, your bond holdings have lost value, and B, maybe you're not getting as much to eat. When I say eat, I mean yield. You're not getting milk from the milk cow, as I like to say, compared to other times. But when we look at the year again, it's still not been a great year for bonds in general. And again, it just makes sense, because bonds don't like rising interest rates, and you know, the Fed has raised interest rates like 22 times, right? So with all these, you know, increases, upticks, it's great for CDs, great for short-term holdings, for money markets. It's not great for things like, you know, mortgages, stepping into home ownership, things of that nature. So, you know, as we continue to look forward into 2023, again, I think we'll see a little bit of improvement towards the end of the year. And then, you know, come January 1 of 2024, we're going to be reevaluating as we start to look out and say, hey, you know, what's going on in Israel is absolutely awful, right? And that whole thing. And then you got, you know, you got China, you got Iran, you got Russia. I mean, you know, the global and geopolitical risk that is surrounding everything right now, it can be a tinderbox, right? So, you know, a spark sets off things. So, you know, again, I'm not gloom and doom. I'm a glass half full kind of guy. So, you know, as I look forward, I say, hey, just be cautious, continue to invest, but I would be a little bit gun shy of equities that were, you know, things like crypto and alternatives, and you know, but if you got a balanced portfolio, you're still working, your employer is offering a strategy that's, you know, a 60-40, 70-30, 50-50 equities versus bonds, I'm okay with that. And you know, just continue to just be consistent. Don't take away or rob your retirement because you're nervous. Sitting in cash, I'm not a fan, right? You know, you have to invest somewhere, but let's do it with some thoughtfulness as we project, right? So those are, you know, some of my commentary. And again, I just wanted to apologize for the data. Just, you know, got dropped in my lap. So this is I'm seeing it for the first time, and this is just my read. And again, you know, the green line is still showing upward trends, right? So, you know, even though we've had this downward pressure on bonds for a while now, we've got a green line. And that means to me is if you're at work and you have the ability to step into some type of bond fund or bonds in general, mutual funds, ETFs that have some bond holdings, income generating portfolios, it would not be a bad thing for you to continue that process. So that's just, you know, remember, we're trying to diversify amongst different asset classes. They have to be risk appropriate for you to be able to step into it. But that's how I look at this chart as well. Last thing is the recession probability analytic tool, you know, we're down to about 50%, right? So it just says 50% is sort of that baseline. It's come off some of its highs and said, hey, listen, you know, things seem to be chilling a little bit, which is good, which is, you know, what I'm hearing also from, like I said, from some of the economists and talking heads, you know, in some of these networks that I listen to. So, you know, overall, I think that it was, you know, it was okay news, right, for October. Especially now I know that we're in November and seeing where markets are, I'm less concerned. But you know, as we finish out the year, I think, you know, I just want everybody to have a blessed and wonderful holiday, which brings me to my favorite part of the slide, right? So again, I had Mike and Diane drove up from Maryland to get their apple pie. If you'd like an apple pie, please make it a point. Tomorrow's the pickup date, you know, but we got a couple clients going on Saturday. They're trying to get most of the people that we've had on our list It's my family to yours, from professional planning services to you. We'd like you to take advantage of it. And, so just send me an email. Say I'm on my way. It's on us, and it's a great after dinner treat. I really do love these. They're amazing pies. Now, when you go, I am partial to the lumberjack chili. If they got any left in stock, I would encourage you to pick that up, as well as some of the cheesecakes. And then, from again, my family to yours, I want to wish each and every one of you a very happy Thanksgiving. Stay safe out there. Keep your heads on a swivel. Things are sometimes, especially around the holidays, can pop off. Just be safe, and hug the ones you're with, and really have a wonderful and happy day. So without further ado, these are disclosures, and thank you again.